Welcome back to Squawk Box. Two big retail reports coming out this morning and two big gainers. Take a look at Lowe's and Target right now. Lowe's stock up about 9%
Target's
right now.
13%.
Target's up 13%. We've actually had some really good numbers across the board when it comes to some of these big consumer companies. Joining us right now with reactions, Charlie O'Shea, retail analyst at Moody's, and Liz Dunn's also here, founder and CEO of Proforma. Good morning to both of you. Last time I saw you, I think we were talking about whether Walmart's numbers and some of these other numbers actually were just operational specific to them or actually a broader situation. That was coming off of, I think, the day before Macy's had tanked.
Yep.
And I think you thought it was maybe just Walmart specific. Maybe there's a bigger story here.
I think it's Walmart plus some of the other big guys that have had the ability to invest and have been able to execute a strategy that makes a lot of sense. Target did the same thing a couple of years ago, said, listen, we're going to take a short-term hit. We think it'll pay off in the long run. It's paying off in spades. You want to look at Q2 for Target. Q1 hit the bullseye. Q2 split the arrow in that bullseye. This is as good a quarter as Target could possibly have had.
And when you look at this, though, I mean, this goes to the strength of the consumer. Do you see? I mean, is there any sign that there's a problem here?
I mean, the consumer's in good shape. I think when we look at the results that have come out so far, we have seen a little bit of weakness at the margin, but I think the market is very concerned about a slowdown. And so, you know, when
are you concerned about a slowdown?
I am a little concerned about a slowdown, but it's, you know, it's going to.
Mr. Wonderful's not concerned about a slowdown.
Where are you seeing the slowdown in the American consumer?
Not in the consumer.
Okay, so.
So companies are
so S&P companies
for
dealing with trade issues that may affect them in the quarters ahead when tariffs go to full burden, right?
Yeah, it's not just about the tariffs, though. They're bracing for a slowdown because globally you are seeing a slowdown, right?
Yeah.
And so companies are cutting back on expense, they're cutting back on travel, and so the consumer is fine.
Here's my question
Fine.
about retail now, because it's a landmine out there for investors in retail. You get some really big blow-ups, and you get phenomenal numbers like the Target we're getting right now. Executional skills, for the first time, matter more than ever in this sector. You have to, the team. You have to look at the team running the show, right?
And size. I think Charlie's written some things about how the large guys are kind of consolidating share, which is sucking out a lot of oxygen for some of the smaller guys and making it very difficult to compete. But you know, they've used their size to.
But I don't care as an investor. I want the big guys to eat the small, inefficient ones, and make themselves even more efficient, which is really what's going to happen here, right?
Retail Darwinism.
Coach sucks from execution, I guess. They picked the wrong stuff. Why don't they get acquired by somebody who knows what they're doing? That's okay. What's wrong with that?
Right?
Hey, Charlie, of these
that doesn't fit in with the BRT.
Of the big companies that are out there right now, which ones do you like? Which ones have the biggest upside? Which ones actually would you not touch? Even the ones, by the way, we have some green across the screen. A lot of people think, oh, maybe we should buy all of this. I don't know.
As a credit investor or a credit analyst, ratings analyst, I think the companies that are best positioned now are on that list. I would add TJX from a credit perspective. I would add Ross Stores. I would add any of our investment grade rated retailers has a leg up on anybody else because they've got the investment grade rating means financial flexibility and a balance sheet. To Kevin's point, you got to execute, but you got to have the money to execute.
You'd buy the credit. Would you buy the equity?
Yeah, I mean, I think for the companies on that list, well, wait, you changed the list. It had Nordstrom and Kohl's on there. So
Never mind.
I wouldn't buy department stores, but Walmart, Target, Home Depot,
Thank you,
TJX.
guys. Appreciate it.